What's happening, guys? It is Wednesday, December 11th, 2024. We are getting ready for some interesting market moves in the next couple weeks going into the end of the year. And just a couple things I want to talk about. If you have time to pay attention, it's something that might open your eyes a little bit about how the market works. Let's take a quick look at some things here. Huge move today off of CPI news, right? As you know, we don't really trade news. It's always market structure. So let's explain why did this bounce? Why did this bounce? Right here, right over here, there is a double bottom, right? I'm going to turn my magnet off here. Right here, this point and this point is a double bottom, right? So what did they do? They ran that stop. They took everybody's stop loss and then ripped it, right? Why didn't they rip it from here? Because if you have, let me see if I can explain this. So this looks like it would be a stop for a lot of people, right? This would be a stop for a lot of people, right? So what did they do? They came down and they took this stop, but they couldn't get enough. They didn't have enough shorts trapped, right? So they had to come down and take this stop. And while they were doing that, they took this one. But here's what's important. If you look at these stops, now I will use my magnet tool here. If you look at these stops here, let me do it on a 15. So here's a stop loss, right? If you're long, this is, you would put your stop under here, right? Retail would. Or you would put your stop under here, right? So they did tag this one and it bounced a little bit, but it wasn't quite enough, right? So when you have a stop that is lower and a stop that's higher here, so some people moved their stop up, but a lot of people did not. They just kept their stop there, right? So what they're going to look for, and I'm talking about the market makers, they're looking for an area where there is a higher low, where there are two stop losses very close, right? That's going to be a target for the bears. That will be a target for the market makers who want to take shares and then rip it the other direction, right? So the reason this one didn't work was because all these stops are down here, and then institutions, their stops are even a little bit lower just in case they come down and sweep this and then rip it back up. They want their stop down here. So this double bottom area here is extremely important because that is where the big banks are sitting, where their stop losses are. So when you see an area, so let's say, okay, so they swept this, right? And then let's say it started to rip, so people got back in, right? Where's their stop going to be now? It's going to be under here, right? You still have an area where you have a higher stop loss above a lower stop loss in very close proximity, right? So there's a high likelihood that they are going to retest this area. So that's why we went short off of this. And I'll get into this here in a moment, why I got short on this. We took NVIDIA short, and it was a beautiful short. It just dumped all day, right? So we have a stop here, and what did they end up doing? They popped it higher and then dumped, and then they took the institutional stop losses at the double bottom area here, and then they ripped it, right? And interestingly, they ripped it right off of the first stop loss. So anybody that went short here, their stop loss is going to be a little bit above this area, and they got squeezed out. Now, why did they run all the way up here? There are two reasons. One, look at this. Just on a 15-minute chart, you can see it. There's a high, and there's a lower high. Everybody's stop loss was right here, right? But because you have a lower high, that is a false top. It's not a true top. A true top, and so look, so then you go down lower. So okay, so there's some people here. So let's say the institutions that went short, their stop is right here on this pretty much double top, right? Then you have swing traders with their stop there, and yesterday's short traders, their stop here. So what did they do? They just plowed through all three of them, right? Now the question is, did they sweep this so that they can go lower? They started to right here, and then they continued higher. Let's zoom out a little bit to the daily chart and also see why it ripped. I'll give you two reasons. One, the retail reason. I've told you many times, Ripster EMA clouds. This is a very helpful tool. It obviously doesn't always work. If you start getting below it, it's not always working, but a lot of the times this area will be support, especially this middle area here. And this is a combination of like the 9 EMA and the 15 and the 34 and the 50, whatever. I don't know what it all means. All I know is that's a heavy support area, right? So it came back into this, and then on news, they ripped it. Didn't matter if the news was good or bad. They were going to rip it because these had higher or lower highs, so they wanted to run the stops. They had at least 3 4 stops to run in an area of support. And then we get into futures trading ideas. Now this is the NASDAQ, by the way, NASDAQ 100. I could do the same exact thing with SPY, but you have a fair value gap, right? Run that over. Look at this. Where was the opening candle? Right at the top of this gap. See the gap between this candle and this candle? This is a fair value gap. So what did they do? They came down into it. They closed above the top half, right? So you can take your box tool here, put a line in the middle, and say they closed above the top half of the fair value gap, which is bullish. You had that combined with moving averages, combined with all these stops, and it was a recipe for ripping, right? That's why I was in all long stocks the last couple days. So that's why. If everybody's saying why did that happen, it's not because of the news. It's because you had at least 3 things converging that pushed it higher. Now the question is, was this a stop loss run or not? We'll know after tomorrow. If they retrace this candle and they close below this line, so let's delete all this stuff. If they close below this line, then that means this gap that we're currently creating, if this stays open, then we are bullish for another push higher. If they close this gap entirely, then we can start talking about filling in these gaps, this gap right here, and pushing lower and retesting the high, because if you see, they never actually touched. And this leads into my next thing. Maybe remove this so you can see a little better. This candle high, they never actually came in and ran a test of it. They never came down. They came up short, right? Now, a couple things. First, what does it mean when they come up short of a number? It means likely the next time they get down to it, they're going to break it and go lower, right? I've said that a million times. You can watch other videos of that. So let's watch this tomorrow. 21606. Let's go over to SPY and we'll do the same thing here. I don't need any of this stuff. Just delete it all. I don't need any notes. Right? So we have prior high has not been retested yet. Right? Now this one has not put in a higher high yet. Let's look on lower time frames and see if there is any reason to go higher. Now look at this one. So interestingly, see how, okay, so this is your high, right? And where would your next high be? If you were trading in this day on December 6th, Friday the 6th, then your stop would be right here, right? I can't get it to stick. Now, what happened to that stop? It got swept already. Now it's been swept twice, right? I don't know if this one got swept or not. Not quite. So now you have we'll call this a double top, and we'll call this the high, and this is double top. So there is a reason to push higher. That you have traders stop there, traders stop there. So there's two sets of stop losses. So let's keep that in mind. Let's not be too bearish yet. There is a reason to do that. Now let's go back a little bit just so I can show you the example of a true top here. Let's see if I can go back to, so for here's one for example. So do you see this bear move here off of this? First of all, it was a breakaway, right? So you were going up. You retail traders would say this was a wedge that broke down, right? So you say that. But what's important is, so this was a stop loss. It got hit, it got tagged, right? It got closed above. And then what happened from here? They never even put a stop close. They just killed it. They just murdered it right here, right? So there's such a gap between this stop loss and this stop loss. Then there's no reason. Let me delete this one so we don't get confused. There is no reason to run both of these stop losses yet. There's a reason to go lower because you have a fair value gap right here. And what do? They get into that, about 50%, they get above it, and then they drop it again. And where is the next stop loss from here? There isn't one. See, there's no stop loss between there and there. Like maybe right here, but like that was pre-market, so that wouldn't have mattered. So they just killed the tape, right? So that's the only stop. So then when they come back up and retest that area, there's no reason to run this stop. And so they are in this fair value gap again. You can see they found resistance here. They pierced through it, but they could not close a candle. Look at that. They could not close a candle in it. So they killed it again. And what did they do this time? They just murdered it, right? So that there is no stop to even take. They just don't let off the gas, right? That's a true top. A true top is going to look like that. You have a sweep of the highs. They take out this stop, this stop, this stop. They keep pushing higher, and then they don't give you a chance. They don't have anywhere to make a stop. Like there's nowhere to make a stop because we gap down so far. Actually, the only stop loss would be this candle open, and then what do? They swept that in pre-market the next morning, and then they killed it, right? So there's no chance to get out of your position, right? What do they do today for longs? They left no chance for shorts to get out. They just maximum pain, just killed the tape, right? I'm lost. So, is that the top? No, I don't think it is, because we got a stop here, a stop very close, right there. Now it's a double top. They can push lower, but I doubt they will. I mean, they will eventually. So let's talk about eventually. So now, okay. So let's talk about this. This candle right here on the daily. Here's your education for the day. If you see what's happened since this last bear run, they came back and retested it here and they shoved it up. They've retested this one. They came back into it and bounced. But this one, they've come up short now. And see how on this one especially, they came down into it and then they tagged it a little bit and then they ripped it the other direction. That's because they are tricking shorts, right? So let's take a look at this here. So this area right here is called a balanced area of the market. There's an equal number of buyers and an equal number of sellers, right? And then again, an equal number of buyers when they broke over it on an election night, right? And then you had this would be considered a fair value gap up because there's no overlapping candles. Consolidation, a fair value gap lower, and then they broke the prior high. So this area right here, and actually let me do this. This area would now be a buy area once they break back above this line. And now in this one it did take a couple days, but it still ended up working. So this area is fair value. That means there's an equal number of buyers and an equal number of sellers, excuse me. And then they broke out with a fair value gap. They broke back in with a fair value gap. So this is a high probability long right here when they break back underneath this line. And specifically, what I like to do is you'll take a Fibonacci retracement and say, as long as they're in the top 25%, and even a spike to the 50 maybe, but not breaking the 50, but in the top 25%, as long as they're still in the top 25, then they're trapping shorts who are trying to short this false breakout. And then they rip it the other direction without taking a break, right? So now let's look at this one. And then I'll zoom way out and we'll take a look at this idea a little bit more. So now we have a fair value gap. I'm sorry. We have a fair value area here where we have an equal number of buyers and an equal number of sellers, right? So if they were going to trap shorts, they would drop back below this area. This area would be your buy area. Right? Now, the fact that they came up short of that, though, means they're likely going to retest this area. So we can start looking for shorts. It's interesting that SPY and NASDAQ, let's look at futures so you can see the difference here. If you look at the NASDAQ today on an hourly chart, for example, and I'll delete all this stuff again. This was the NASDAQ open today. It opened and just ripped, right? This was the S&P 500, same thing, it just ripped. Now let's look at the Dow Jones. The Dow Jones never really ripped. There was a little bit of 7 o'clock news, and then they completely erased it, and then they sold off for the rest of the day. So you have a very interesting I don't know what you call it, conundrum, I guess, where the NASDAQ ripped, SPY ripped, but the Dow is down, right? Let's look at small caps. Small caps kind of just move sideways, maybe down, right? Every pop got sold, right? So there is weakness in the market. Let's look at one more thing really quick. Let's go to the daily chart for this. Actually, we'll do the weekly. Let's see what the RSI is showing us. So the RSI is relative strength indicator, index, whatever. If you look at the NASDAQ, you had a high and a higher high, right? What is the RSI showing? A high and a lower high. There's a divergence here where the RSI is showing weakness, but the stock is not. The underlying stock is not. Let's also take a look at S5FI. This is stocks above their 50-day moving average. We are right here at the 50. So half of the stocks in the entire S&P 500, half of them are above their 50-day, are bullish. So half of the stocks, 250 stocks are bullish, and 250 stocks are not bullish. You also have now, I don't know if you pay attention to this kind of thing, but we have this kind of crossing over and finding resistance here. Anyway, that's not important. Don't worry about that. This is an interesting tool to look at and make sure you're on the right side of a trade. S5FI, when it gets above 90 area, that's usually the top of a market. And when it gets below 10, that's an excellent time to go all in long. And that didn't work. I was going to try to compare them both, but I don't know how to do all that stuff. So anyway, let's look at some stocks. This is uranium. Uranium has been in a bullish pattern since this breakout we talked about way back in July, right? Came back down, retested this area, double bottom, and took out these highs, and currently I believe is bullish still, which is why we are in LEU. LEU is just forming a wedge here, And and if you notice, here's interesting. This is on a Wednesday, October 16th. This is when they break out, right? Wednesday, November 6th, Wednesday, November 20th, and then today we gapped up on Wednesday, December 11th. I was really expecting a green candle today to break out there. But the reason I'm bullish on this one is because we have the same scenario going on here. We have two very close stop losses next to each other. Get it to load here. So we have a stop loss here, we have a stop loss here, we have a stop loss right here. And there's really nothing between this area and this area, so I wouldn't expect a whole lot more than that, or they could just run right through it. But I do at least expect them to come sweep this area. So, maybe I was a little eager getting 100 calls, but I do believe that's a good, nice round number, and they have a reason to break this area. We now have higher highs, or higher lows going on here, so I do still think that's bullish. You jump over here. I know I'm jumping everywhere. This is an economic cycle-based rotation. If you watch what markets do, you'll notice that it goes through this list. Sometimes in a week, sometimes during a recession. But usually you will see this move linear like this. So we had technology. Let's look at what stocks did today. Technology, super green, right? Discretionary, Tesla. Consumer cyclical, super green. Tesla, Amazon, super green. Industrials, not so much today yet, so we'll see if that one happens. But communication services, Google, Meta, super green. Netflix, super green, right? So as we rotate this way, so these took off. Industrials would be the Dow Jones, which we said, sold off hard today, but it's very possible that could get a nice bounce tomorrow. And then what's next? Energy. Energy and materials. You look at gold and silver. We can look at silver real quick, and gold, and then energy. These will be the next sectors that are moving. Now, I kind of thought with NVIDIA dropping, I thought we were already moving away from that, because if you guys remember taking NVIDIA short to 134, which we got out at 136, but, that was a sweet move. If you look at it on like a 5-minute chart, we got in here. This was like my little trigger to when it comes back up here to go in short, and it just almost didn't stop, right? It came down to this gap. This gap was, go back here. I think it was this gap between, here, let me take this off. So see this gap? See this gap? This is an island reversal. See this gap here? So that was kind of the first target, and the second target was breaking this down here at 133.99. But yeah, look at that. It went all the way to our target. We got out down here when it broke into this channel and started to bounce out. I thought, they might want to rip it up a little bit, so we got out. But that was an awesome move, right? And then what did they do? They came back in here. They put another island reversal down here, came back and tagged it, and now they're bouncing higher. So anyway, the whole point is saying I thought technology was already dropping, so we're moving along, and energy and materials are going to be next. So that's why we took LEU as energy. Energy stocks, uranium has been extremely strong. Disney, now all these are the same pattern, just so you know. So Disney, if you look on the bigger charts here, I don't know. This one might be dead. Let's skip that. I was thinking they were going to come tag all this stuff up here, but honestly, the way they dropped on that, and they didn't just rip it back up, I think it's dead. Let's not do that one anymore. What's the other one we're in? I don't remember. Oh, car. That was kind of just off of Tesla. But I do like the idea that the shorts are trapped here. You know, it's in a bullish trend. I'm not sure why my thing's not working. Let's go back to car. Oh. Car might or might not work. I don't know. I was just hoping it would. It's so in industrials too, and Dow Jones. So Dow Jones, I thought, because Dow Jones transports, you know, really ripped on Tuesday. So I really thought this one was going to rip back up here. So you have a stop loss here, stop loss here, stop loss here. So they could at least come back to this 115 area. That's why we're in 107 and 110 calls to see if we get some kind of run. I still like this, as long as we stay above this 98 area. You know, they kind of came in, started to break down. They created a bear flag. They dropped it. They killed it. They took out these lows, and then what did? They ripped it in the other direction. Now, the only thing they might do is we do have some stops down here. So just like the NASDAQ, maybe they didn't go deep enough. Maybe they need to come down to this 190 or 96 area. So breaking 98.40, I'll just say I was wrong, and we'll watch for it to get down and then come back up and see if we can get that 115 area. So keep it on watch for next week. Silver, I'm not in yet. I hold physical silver. That's about it. I think it's a very good thing. If you look at silver, we have been consolidating really for, other than the COVID drop. I mean, we've been in this area for a very long time, right? 2020, they're just now back up to the top. And I feel like when we get out of this area, it's just not going to stop. So I'm going to start adding into leaps on silver. That's not even the right chart. SLV. I'm going to start adding into leaps here, and we'll kind of see what this does. But you know, if you remember COVID, you know, silver was in this channel for years, from 2014 till COVID hit. It's 2020, and it finally broke out of this area, right? It just gapped over it, and never came back really, and squeezed pretty high. So that was quick. If you remember, this was just like a couple days. I mean, it was like one. Look how big these gaps were. Right, 1, 2, 3, and it just took off, right? And then it stayed above this channel mostly. They came back here in 22, but mostly it's been in another consolidation area, and now it is breaking out again. So I really like silver as a long-term investment. It's breaking out, and it looks like it's now found support in this prior breakout area. So I'm looking for this, 35-40 area to happen pretty quick, like end of the year quick. So we can start working on that. But I do like it on the long term chart. We've got a really high way to go, at least to this area, 34, 36, and then we can get real crazy once we start getting above 36. And just like Bitcoin, I think, if you remember, if you look at our Bitcoin chart, see if this will let me. No, it won't. I don't know how to do this stuff. But anyway, if you look at Bitcoin, right? We had this like top, it came all the way down, and then it just took off. It didn't stop, right? And it just absolutely ripped. That's what I think silver's going to do. It's just gonna take off and not stop once it does break out. Here's an example I've talked about from last year. Walmart was the best investment of all time, by the way. No, not really. I don't know if it's any better than Nvidia, but you know, this is a 3-month chart. If you look at, you know, a weekly chart, Walmart was sideways from 2020 to it finally broke out in 2023, and it didn't stop, right? Like it had some resting periods a little bit, but I mean it didn't stop. So that's what I'm looking for in silver. If you kind of look at this weekly idea, see how they came into the 200 weekly, and that was really the trigger that took off. If you look at silver, it's kind of the same thing, right? We're breaking, we spent a lot of time on that 200 weekly, and that was the fuel to get us going, and it's just not going to stop. Another stock that nobody's talking about, but I think is going to do exactly the same thing, is EA, right? EA has been chopping since 2020. It's finally breaking out, and it used the 200, you know, multiple times, and I think when it takes off, it's just not going to stop. So 2025, my list is starting off with EA and silver. I don't know why EA, you know, maybe just old companies will come back eventually. I don't know. So that's about all I have for ideas so far. But I'm going to start making a 2025 ETF, just like I did last year, and we'll track that a little bit better this year and see how it goes and get some leaps for those that want to invest, and see how we do. So that is the end. Oh, as far as stocks to look at this week, I like Snow Short. We talked about this breakout. It was supposed to go up to 195, and it didn't. Right? They couldn't even close above, or 185. Yeah, it was supposed to go to 195. They couldn't even close above 185. We finally have a 200-week moving average showing up, and I thought they were going to run a test of that, but they can't even close above 185. So I really like the idea of just fading this pop. Snow is I think it's a horrible stock. So another one we can look to fade short is SQ. Everybody's talking about how great this stock is and how it's just going to take off again. And I know just from experience, it's not going to work. We have this gap right here that we need to stay above. And if we get below this gap, I like it back short down to here, this $30 area. SQ, nobody cares about them anymore. Same with SoFi. SoFi is going to be the same exact thing. They're going to run into this, they're going to probably take this double top, run into this fair value gap here, and fail, and just come back down. There's just nobody is going to want to buy SoFi when they can buy JP Morgan or Bank of America. And JP Morgan is just phenomenal, right? Why would you buy SoFi? SoFi is not going to be around in 5 years. SQ is not going to be around in 5 years. UPST is not going to be around in 5 years. So nobody's going to buy that. They're going to short the rips. This move is exactly what I'm looking for on SQ, right? Getting much below this area, it's just going to fade back to the 30 area. So I like that idea short. As Snow short this week for sure. I'll look into that. SMH looks interesting short. While we're talking about it, I'll look at Nvidia. But, you know, I just think Right now it's confirming that this breakdown is still holding. That's not what I wanted to do. See this candle, fair value gap, this candle, it's respecting this area, and it's not even getting, even in the top 25%, it's not even, before it just drops and sells off. So I want to look at SMH short, and specifically this, for a retest of this right here. Come back to it. You got two stops very close. Double bottoms like to get swept. We're very far away still from the 200 weekly. So, you know, we had a nice move up, and then they're consolidating. And this looks exactly like Tesla did before it finally dropped. So, I like it at least down to here, if not down to this fair value, untested fair value area right here, down to 185. So quote me on that. Tech crash coming your way. Nvidia's just got too much going on to stay high. It's got all these stops here, another stop close to it. It's gonna run down, and breakout failure target is going to be this here 126 area, 127. You know, now that it's added into the Dow, there's no more news, there's no more rumor news to buy, right? Buy the rumor, sell the news. The news was it was included in the Dow, which means it's going to slow down. It means it's not going to have these radical runs anymore because it's in the Dow, and the Dow moves slow. So nobody's going to want Nvidia anymore. And AMD, I mean, they broke down here. Now they're breaking down from this giant wedge. Now they're breaking down from that. And that might not have as far to fall, you know, 115 area, but AMD might do okay. AMD might come down here and save it and go a little bit higher, but I wouldn't buy it. I'm not interested in buying it. Nobody else is either. That's why it's selling off. You got 3 consecutive higher 1, 2, 3, 1, 2, 3 would be down here. Start getting under it like this, you know, and then you can start talking about buying it. But it's just going to do the same thing. It's going to get down here in this probably 105 area, 100 area. So I like AMD, looking at that short in the coming weeks. And that's about all I got, except for this one last lesson if you want to stick around. It's about another note on fair value gaps and fair value areas. Let's start on a clean chart. Well, no, that's not a clean chart. Something I haven't marked up yet. Okay. Let's take a look at this on the monthly with no indicators, nothing. So this was the 2008 crash. This was COVID crash, right? So I want you to take a look at something interesting here about fair value. Fair value means there's an equal number of buyers and an equal number of sellers, right? And how you can predict where bottoms are during crashes. And I wish I would have known this back in 2020. It's been almost 5 years now since I've started learning this idea of fair value. I used to just, you know, trade like everybody else, but this has really changed my opinion of how the market works. So let's say you have an area of fair value here. You have an equal number of buyers and an equal number of sellers, right? The area underneath it will usually create another fair value area. Yeah, I mean it has to, right? Because there's an equal number of sellers and buyers. So let me take off my magnet again. Okay, so this is balanced. There's an equal number of both. This is balanced. There's an equal number of both. We know passing through this, this area is balanced because there's an equal number of both now, sellers and buyers, right? You start looking on these smaller candles, you have this area is considered balanced because there's equal buyers and equal sellers. Equal buyers, equal sellers, right? Then you get up to this area, so this is equal value. Equal buyers and sellers, including that wick. This wick right here. This wick would be an equal number of buyers and sellers, right? Overlaps here. There's no fair value gap here. So there's an equal number of buyers here and sellers here, right? This is all balanced, right? Right here. This is all balanced. Equal number of buyers, equal number of sellers, right? With this drop, this candle here. Come back up. All of this area is good. Equal buyers and sellers. They did drop back below this one to retest this area, but this area held. See, they wicked back up, right? So, because that's a balanced area. If there's a balanced area, there's no reason to go back into that area. Does that make sense? That if it does, then that's just free money for you. Go long and get out of that area, right? It's not until they drop below an area that you need to start worrying about that stuff. But that's the idea. You could just make an argument that this whole area is equal buyers and sellers, right? So that held. That's equal. That's balanced. I like the word balanced better. There's an equal number of buyers and sellers there. They broke out, chopped around, retested this area. That was the go all in long, because they're not going to stay in here very long. Because this area is balanced, this is balanced, this is balanced. There's no reason to be in here, so push higher. Right? Now, then we get this. This is interesting. And this is how long it takes the market to correct. This was December of 2016. All the way up to here, there were no sellers. See what I'm talking about? See how this has overlap? This has no overlap. It's only green until you get to right here. This is an equal area. This was an equal value area. There's buyers and sellers coming back down into this area, right? Now, extend that out. Hold on. This is how precise the market is. Let's change this to a different color here so you can see what I'm talking about. This is considered a fair value gap. It's a gap pushing higher. There's no equal number of sellers, right? All this was a equal number of buyers and sellers, So that's a fair value area. And then it just absolutely ripped and took off, right? Eventually, what happened? It came back down and made this equal value. From April 17th all the way to December 18th. It took that long for the market to correct, but eventually it did correct, right? So, hold on, I got a good one for you. So this area barely got traded into, and then it ripped the other direction. So this is still considered a fair value gap. That means eventually this will fill in. So we broke back up here, made fair value areas here, and then what happened in 2020? COVID crash, right? We had fair value area here. We had fair value here with the COVID crash. And where did they go? To the bottom. You can't make this up, guys. The bottom of the fair value gap. So that now this entire area is balanced. This entire area is now balanced because of COVID. So there's no reason now, there's no reason to go lower because this is balanced. This was unbalanced. This was balanced, this was balanced. But yeah, that was December 2016 to February 2020, March 2020. It took 4 years to finally correct. That was a correction, and look how precise that is. That's absolutely amazing to me. Okay, let's keep going. So, of course, I didn't know anything about fair value gaps at that time, so I had no idea what was going on, but that would have been the bottom. That would have been an excellent place to buy. So what are they going to do? They're going to come back up to this area to retest and make sure all of this is fair value. They're going to break this, right? And then they created another off of here. You know, they made fair value area, and actually they used the candle bodies even, but you know, this is a fair value area, equal number of buyers, sellers, right? Hold on, stick with me. Then we had this fair value gap right here. And then we had an area of fair value. Go back to white. I know this is taking forever, but this will change your mind. This will change how you trade, especially how you invest. And then what happened? Eventually we got a correction. So now this whole area is fair value. And what's not fair value? This. And what did that mark? See how they did the same thing here? They bounced off of this area for a bounce, but it wasn't enough. They had to really come in and go below it. They had to break below it so that it would finally be fair value. So now we can make it white because it's equal. And then what did they do in 2022? Or 2020, 2023, in 2024, they had to run back up here again to make this area fair value so that all of this is now fair value. And then what did they do? They broke out and oops. Technically, hold on, let me back up. Technically, just this. There's a fair value gap. Because technically a wick is considered a fair value area. So let's say this is a fair value area, right? And then they went higher. Let's change this to white so we can stay consistent. White is fair value areas, yellow is fair value gaps, right? So what did they do? They went higher and then they came back down and retested that area, that wick. So that's all fair value now. How did they create this? They broke out, created fair value gaps, and eventually created fair value area by this wick, wicking down here, right? And technically up here. That's a fair value area. So now what are we left with? See, that touched. This is now fair value. There's no reason to trade back into here. And really, there's no reason to trade back into here. And then now what do we have again? A fair value gap. Of course, December is not closed yet. So we'll see what December does. I kind of have a feeling December or January, we're going to end up back down here at 5,800, SPY 580, right? Because this is a fair value gap. But just so you know, just like COVID, just like 2020, it took a COVID crash to retest, and that was 4 years. Took 4 years. Now the first one, they'll likely bounce from it, and then the second one, they'll come in and actually close below it and equal it out, right? But if you look at this, from 2008 all the way to, 2008 all the way to January of 2024, the whole market is balanced. So that says there is no reason to ever trade back below 4,800. There's no reason. It's all balanced. Does that make sense? What's not balanced is 4,800. And November. So, what are we going to do? We're going to put a line here and a line here and say this is needs to be retested. Does that make sense? This will be closed eventually. This will probably be closed sooner than later. 58.96 on the top of this candle to make this a balanced area before the next leg higher. So that's why I'm getting a little bearish here. We got two fair values now, fair value gaps. And this baby is going to be the bottom of the market. So it might not happen for another 4 years. But when we do get another crisis, you better be buying 4,800. If we for some reason get below 4,800 and take out like this low, then we have a serious crash on our hands, because there's no reason to be down here anymore. Everything is balanced all the way to 2008. And the only place that is not balanced is under 2008's low. Just like this, how this was a balanced area already from here to here, and then they got below it before they started taking off. That is the only other unbalanced place, is below 668 SPX. Is that ever going to happen? I doubt it. Our dollar would collapse, I think, before that happened. But just so you know, I mean, like, the precision of the market is amazing to me. But this will be retested. 4,800 SPX will be retested, and this area will be retested. And that's where you're going to want to buy. It's 4,800. The only other way to do this would be is if they broke below 4,800, they're likely going to try to run actually this again, and then under this swing would also be unfair value, and it would bounce off of that. So probably if we actually got a crash, 3,500 would be an extremely good place to buy the market. But 4,800 looks good for me for right now. So I'm looking for 2025 to be bearish. I'm looking for the rest of December and January to be a little bearish and close this gap and get back down 100 points or so to 5,900 area. So that's kind of why I'm thinking stock short for right now. It might take a couple of years to get back down here, but that will be where I start yelling, screaming at the top of my lungs to buy the market. So if you think you've missed the greatest bull run of your entire lifetime, you haven't yet. It just hasn't occurred. So we just got to wait for it. But anyway, that's what I think. See ya.